I'm sure you guys recognize this guy here. If you don't, you've definitely heard his name before. His name is Dan Ives, and he's one of the top tech analysts in the entire world. He is a 4-star analyst and ranked 1,607 out of 9,184 Wall Street analysts, and ranked 3,770 out of 39,308 so-called experts. So he's easily in the top 10% of everyone on Wall Street in terms of success rate and average return per rating. Now we're going to circle back to what Dan Ives just said about markets in a moment. He says this: Nvidia results will spur a Santa Claus rally. First and foremost, Nvidia is down about 2.2% currently on really good earnings. Now here in this channel, I explained this thoroughly heading into Nvidia earnings, that there was a risk of a downside surprise. Not that Nvidia earnings were going to be bad, like you'd have to be really bad at investing or just not paying attention for the last 2 years to forecast bad earnings from Nvidia. Like nobody had that in the cards. But the question was, does Nvidia impress investors? A stock like Nvidia, that's a $3.5 trillion company, has to not just beat on earnings, but impress investors. And you start to get to a point where you're now a $3.5 trillion company, like to double from there, you're going to gain $3.5 trillion of market cap, right? So each percent, 5%, 10% higher for Nvidia really needs to be justified. It's really a question of long-term sustainability of margins and of AI, in which we really got confirmation of that today. Now the road is going to be bumpy, yes, and there is issues. Margins are expected to fall from 75% in the results that we got today down to about 73% or so for next quarter. There's a little bit of concern there. What's going to happen to margins longer term if Nvidia is not able to quote unquote price gouge their customers, especially as more competition does come. There was also questions about how long Nvidia's demand could remain this strong, and Nvidia pretty much put those concerns to rest by saying Blackwell's supply, or demand I should say, is going to far outweigh supply for the next coming quarters. We're talking 6 to 12 months here. So at least for the next year, Nvidia is going to sell everything that they can produce. That's the key to what we're going to talk about in this video. The AI bull market is indeed continuing. Now, yes, will analyst expectations for Nvidia fluctuate up and down? Is Nvidia's growth rate going to slow down? Of course, we have all known this. But the AI story is here to stay. And I might be the first person to say this, so let me know down below in the comment section what you think about this. But this was actually the best case scenario for Nvidia. Now, not just for Nvidia, but for a broader, more inclusive AI rally, or perhaps a Santa Claus rally. Because you're taking some of, not all, some of the spotlight away from Nvidia. Now, we were expecting a $300 billion market cap move today. Higher or lower, is pricing at about 8.5% for Nvidia. 8.5% doesn't sound crazy, but $300 billion is a wild number. Now that the spotlight presumably is going to be off of Nvidia a little bit, again, not enough to kill the story or make people question if AI is a bubble or not, but just dim the spotlight a little bit, it will allow other areas of our markets to really excel. Other AI names and data center names, perhaps AMD can do very well. Maybe even an Intel could do very well. Applied Digital or Snowflake, as we've seen today. Here's another fan favorite, Palantir could start to see additional capital funneled into those areas because Nvidia's demand's not going anywhere, and AI is here to stay. So if those other companies, are going to be here to stay as well, if their demand's going to continue, there could potentially be a lot more gains in those areas because you are not priced for perfection. Now, Snowflake is a great example of this. They beat across the board, raised guidance, the whole shebang. The stock's up 20% in after hours, and I do think we're going to see a lot more of this action within your second, third, and fourth tier AI names, as Dan Ives says. And I want you guys to now take a listen to what Dan Ives just said about Nvidia earnings. And I have to be honest, I don't agree with everything he says, and I'll tell you up front what I don't agree with. I don't agree with this hyper fixation around Nvidia. I think from a current investor perspective, if you do not own Nvidia, Nvidia is not a good buy today. Not at current levels, not at current valuations. If you were able to pick it up at $90 per share, $95, $100 per share back in August, that's a much more compelling area to buy. And it's not really solely based on valuation, just your price for perfection. The stock's already a $3.5 trillion market cap. And I think a Snowflake, for an example, could double faster than perhaps Nvidia, right? Just given the size difference of those two companies. I think on a risk to reward basis, there's better areas to put capital to work. So I don't agree with the hyperfixation around Nvidia that a lot of Wall Street has. I think that'll start to dissipate and broaden out to other areas. But that's one thing I would critique Dan Ives here, if I'm even allowed to critique Dan Ives, which I'm probably not, given he is a top 10 Wall Street expert and I am making YouTube videos. We're not going to get into that. Nonetheless, I just don't agree with the lofty expectations that Dan Ives has for Nvidia specifically. Like $4-5+ trillion market cap, company. Yeah, I don't know if that makes sense anytime soon. But for the topic of this video, a more broader based AI rally looks a hell of a lot more likely than that.
But let's get to Dan Ives now, Global Head of Technology Research at Wedbush Securities. As this market digests this news, Dan, we are seeing a little pairing of those declines. You were looking for a mic drop quarter. Could you call this that?
I think you print this press release off and you can put it in the Louvre. Just frame it. Oh. Because look, what you're really seeing here, this is a stock that's going to be green tomorrow. What they're putting up in terms of Hopper, in terms of overall growth, it's exactly what the bulls want, and he'll continue on the promise. Next quarter that could be a 4 in front of it in terms of ultimately revenue. This is just the beginning of the AI revolution. $4 trillion on its way. Sure,
and long term, you may be very well right, but are you not concerned about this plus or minus 2% that the company is reporting on revenue, simply because the market wants the company to beat well every quarter?
Yeah, if you looked up sandbag special in the dictionary, you'd see this guidance. And I think Street's going to look through it. I think this is a stock that probably will be up even on the conference call, because if you look at everything that they did here in terms on the data center, you could Hopper, we could be talking 5, 7, 8 billion per quarter. That was just ultimately many thought it could just be a few billion. So as this all plays out and you start to look at numbers over the next, call it 12 to 18 months, the godfather of AI, Jensen, Nvidia, continue to be in that Mount Rushmore, and it just shows it's starting with Nvidia. Now second, third, fourth derivatives playing out. That's why it's 9:30, 10 p.m. in this AI party that goes to 4 a.m.
Oof. Has the time changed at all since he came out with that?
It was 9 p.m.
Okay.
And now we're 9:30,
okay,
10 p.m.
Got it. So my other question to you, since there are so many commentary, there's so much comments on Blackwell, how production will ramp up into fiscal 2026, the production shipments will begin in the fourth quarter of fiscal year 2025, which is the current quarter. Does Nvidia break out Blackwell revenue, or is this something that you and investors always need to reverse engineer out of the data center numbers?
Yeah, essentially investors reverse engineer it. But if you look in terms of some of the wording there, basically saying any of those heating issues, don't worry about it. And I think that's going to give more and more comfort. This is going to ram significantly in terms of that. And I think that continues to be the story, because we've talked about from our Asia trip, demand to supply 15 to 1. And there's only one game in town, and he's wearing a black leather jacket. His name's Jensen. And I think that's why this continues to be still in the early days of what I believe we'll be talking about $4 trillion and on.
You mentioned the overheating issues, and these are Blackwell, overheating, which might require redesign of the servers housing the chips. And the companies that make the servers are Dell, Hewlett Packard Enterprise, Supermicro. Do they end up carrying the cost of having to redesign everything?
Yeah, but ultimately, I think that is something that's really noise. And from all the checks we do, that's why, look, when you're at the top of the mountain, you're always going to have people trying to take shots at you. But if you look at how Nvidia is playing out here, there's really no production issues as this all ramp. And that's why when you hear from Jensen today, I think investors are going to realize this AI revolution, now it's about second, third, fourth derivatives. You look what's going to play out across software, across the rest of the semis, across cybersecurity. If you're a tech bull, this combined with obviously the last few weeks in terms of Trump, Musk, and everything we see, this is what I think is really going to be a setup to a Santa Claus rally.
So we are seeing Nvidia saying that Blackwell is going to exceed supply for several quarters, but that there are some supply constraints. Now, you do those channel checks, Dan. Tell us the truth. Where have you seen those bottlenecks or those potential places where supply will be constrained?
Everyone's waiting in line. They're at the velvet ropes, and there's only one party, and that's really, in terms of Nvidia and Jensen, I think the issue there is that you want those next chips. That's what everyone. That's the new oil or gold.
Yeah, but that's the customer side. I'm talking about from the supply side, from Nvidia being able to actually deliver these.
It's ramping. It's ramping. Look, like any new production, any new chip, it's going to take time to ramp. But I would say if you thought relative to 3 months ago, ahead of expectations. So you sit there right now. If Jensen's flying the plane, you're in 3A watching Netflix feeling pretty good.
In terms of pricing power, can Jensen Huang raise the prices of those Blackwell chips even more than what he has already? I mean, what are you expecting on that front? And should people look for maybe increased prices for those chips?
They definitely can, but right now it's all about market share. They're just going to continue to go further and further out. And even when you look at what the hyperscalers are spending, you have now $400 billion of capex, AI capex, just in your sites. Then you think about sovereigns, you look at private, look at everything else. It just shows we are in an unparalleled, once in a 40-year tech trend, and that's why that Mount Rushmore is Jensen along with Nadella, Karp, and others.
You talked earlier about how there's a velvet rope and a lot of people waiting to buy these chips. The hyperscalers are at the front of the line, but if you bring in sovereign buyers into the mix, where do they stand? Do they get to jump the line?
Sovereign's in the middle of the line. They're saying, oh, my name's in the list. They're like, look, you can't get in front of these people in the front, and that's big tech. Sovereign's still in the middle of the line. They will get in, and then behind them, it's the rest of the Fortune 2000. That's why we're going to be talking about next year or two, $4 trillion, $5 trillion. This tech bull market, still in the early days.
I actually think Dan Ives is correct in predicting this end of the year Santa Claus rally via what is likely going to be more AI optimism. Now, I just think the optimism is going to be less about Nvidia, but more about maybe the hyperscalers. I think they're still kind of, big dogs fighting for kibbles, right? Little crumbs. Whereas some other names, smaller mid-cap companies, have more to gain in the near term from this AI revolution that's probably now starting to kick into the second phase. And again, I've talked about this for a long time on the channel. Eventually, it'll go from this pickaxe shovel-like mentality around AI to who's actually, for just the analogy's sake of like the gold rush, who actually bought the best land with the most gold on it, right? It's going to change to who's actually applying AI, who's doing something with AI. I think Tesla can excel here. I think data centers more broadly can excel here. Applied Digital being my favorite up-and-coming data center play. By the way, Nvidia has been investing in them, okay? So there's a lot of different names. Snowflake, Palantir, some of these names you know about that just offer better risk reward profiles from now into the end of this year. Keep in mind, don't get mad at the messenger here. I would say something else, but YouTube would probably ban me. Don't get mad at the messenger here, okay? With what I'm going to say next. There will be a correction, a growth scare at some point. Now, I think Meet Kevin actually in one of his recent videos where he calls out this inventory problem that we're starting to have via the hurricanes and the job strikes, whether it was the port strike with fears of a prolonged, shutdown, caused companies to overbuy in inventories, which it makes sense, has had like a near term, short term, I should say, boost to economic spending, right? To some of the GDP numbers that we've seen. Whereas once we get into 2025, some of that could start to go away in a pretty dramatic fashion, and you're just going to get a simple growth scare, right? Where people are like, okay, we're guaranteed soft landing. And then people are like, oh, maybe we're not. See, it's kind of funny. I actually went on a cruise recently. We went to Costa Maya, we went to Cozumel, we went to Honduras, specifically Roatan. And when we were in Roatan, we did this like half submarine thing where you kind of crawl in the bottom and it's like glass on the sides. And at one point, I don't know what was going on, but we were rocking back and forth. But it's kind of funny to the same analogy of like a growth scare. When you got in the boat and like sat down or whatever, you're like, okay, this is pretty safe. I didn't really know what to expect, but I was like, okay, this is all right. And then at one point you're like, are we going to capsize? Like, I don't know if we can get out of this. If we capsize, probably not. Odds were not good. Thankfully, we did not capsize, but that's kind of like a growth scare, right? Everyone thinks things are fine, and then once things seem like they're not fine, and it was funny because everyone was looking around at each other like, are we about to flip? It was moving a lot. That's kind of like when you get a growth scare in the economy. Everyone's like, oh crap, maybe we were wrong. And everyone's silently panicking. Okay, kind of the same analogy. And eventually that will happen, likely in early 2025. Could be midpoint 2025, but I see it as happening a little earlier than that, just given how bullish people are on a soft landing. And I think that's going to be a great buying opportunity. But if you really want to buy some things now, I think value, cyclicals, AI appliers like Tesla, like, again, all the companies that I've mentioned here in this video so far, but I think there's value in dividends out there that also make sense, especially as Nvidia takes a little bit more of a back burner, not perhaps maybe leading our markets as much over the next couple of weeks. That could really allow capital to go into other areas of our markets. Now, if I owned Nvidia, which I do not own Nvidia anymore, I just didn't like it anymore on a risk to reward standpoint, made a lot of money in Nvidia, early investor, and sold out at about a $3 trillion market cap. So I missed some of the gains, but again, I see there being better risk rewards, like even a Palantir for that matter, than Nvidia. And the way that I look at it is I think Palantir has an easier path to doubling or tripling rather than Nvidia. Like for Nvidia to go up 100% from here, it's going to be a $7 trillion company. It's going to be, almost 30% of the United States GDP. I don't know how reasonable that is anytime soon. Could it happen? Sure, there's been crazier things that have happened. But how sustainable would that be as well? I just don't think so. Whereas Palantir, if it doubled, last I checked, it'd be like a $200 billion company. That could make sense to me. And it might be even less than that. I haven't looked, super recent. A fraction, call it, of Nvidia. Okay, and you could say the same for even a Tesla. If Tesla doubles, it's going to be a $2 trillion company. right? With the prospects that Tesla has going for it with full self-driving and Optimus, like how do you even put a cap on that? You can't really. I mean, with especially with Optimus, like you cannot put a cap on that because there's so many different use cases longer term. It's going to take a while to get there, of course, but you know, I see today as a big positive for markets. The AI story did not die. In fact, I think it actually got stronger. The longevity of it got stronger with, again, Nvidia saying, without saying, that there's basically unlimited demand for like the next year for their products. So for now, the AI trade got stronger, just not in the area that has been leading things, which is obviously Nvidia. Ultimately, Nvidia will do just fine, and I think it's anyone's guess to what happens over the coming days, but I would argue the case is stronger for other areas now. Just my opinion. I would love your thoughts down below in the comment section. In the meantime, you guys have a fantastic rest of your day. That's going to do it for this video, and I will see you in the next one.